In the metals quadrant, taking a look at the July copper futures contract, which had an intraday reversal, we made a new low, lowest level actually in about 15 months, going all the way back to March of 2021. We hit 3.9455. That was down 1.69% from Friday's settlement, which was 4.0135. We then rebounded to a positive level versus Friday's close, getting all the way up 1.73% higher than the close on Friday, 4.0830, ended up settling up about 0.7%, well over that $4 mark. It's only the second up session in the last 5 and only the third up session in the last 8 for the July copper futures contract. Now, demand and to a certain degree supply is part of the equation for copper and today's movement. Reports of China demand normalizing for this time of year are starting to emerge. For example, according to the SMM survey, copper concentrate exported from Kazakhstan to China, which had been temporarily halted, have returned to somewhat normal levels, at least for 1 month. There are, however, some potential supply disruptions down the road as the Codelco mine in Chile stopped production for maintenance, and they're being threatened by a strike at the same time. So if that strike were to materialize, you could potentially see higher prices on a story of restrained supplies. Now also U.S. yields which are up, but still are low versus last week's highs, aren't really that much of a headwind. Right now, we've got the 2-year up about 4 basis points, the 5-year up about 5 basis points, the 10-year up 5, and the 30-year up 6, but still well below the levels we saw last week on Tuesday. So it's still looked at as being pretty much a stabilization of yields and a stabilization of the dollar. So it's not adding too much, or I should say not taking away from the copper move we saw today.